This is the Wall Street Shuffle.
At 877-326-3255. David Morgan is with us right now. He's publisher of the Morgan Report. David, how are you?
Doing well, thank you.
All right, my friend. Let's get to what. First of all, tell everybody what the Morgan Report is.
It's a report that's on money, metals, and mining. It looks at the global economic picture, focusing on what real money is and why it's so important. Then we talk about mining and metals themselves, which is, of course, gold and silver primarily, but we look at the base metals and the rare earth elements, et cetera. And then we move on to the mining sector where you have the highest risk to reward profile.
All right, now let's start with my favorite. Let's start with gold. It has done remarkably well for me over the last 10 or 12 years. Lots of people are saying it's peaked. I don't understand how they could say gold has peaked. What's your opinion?
Has not peaked. It's almost impossible to make that statement if you're thinking at all, in my strong view. And the reason being is that when we had the inflationary scare from, say, the early 1970s through 1980, and inflation by then, the then used numbers was about 13%. Gold went roughly from the pegged price of $42.22 all the way up to $850 in January 1980. And that was basis the inflation problem being a U.S. problem only. This time it's a global problem, and we haven't even gotten close to covering the monetary base. Let me back up and say that when gold hit $850, you could have actually gone on a gold standard. You had enough gold price-wise to cover every dollar out there in existence that was a U.S. dollar. In order for that to happen this time around, if you use the government's number, you'd have to be around $3,000 an ounce. And if you used the methodology that was used to calculate the 1980 cover, in other words, using inflation numbers that were used for the CPI back in 1980, which we no longer use and have been distorted terrifically, you would be up into the thousands of dollars per ounce for gold.
Yeah, and I don't think people understand that. They say, well, how can a metal that does nothing, how can it be worth all this? And it is, people really need to think of it differently. If you can imagine paying $100 million for a painting, then you should be able to imagine paying $1,700 or $3,000 or $5,000 an ounce for gold. It's the fact that it can't be duplicated. It's rare. It's divisible. It's indestructible. It's all those things, and that's why if there was something else like gold, gold wouldn't be gold. It'd be something. It'd be a rock.
And I'd like to add on to that, if you don't mind.
Sure.
And basically, let's think, and I'm not saying you, Dan. I'm talking about your listeners.
Sure.
Our listeners. An ounce of gold never changes. An ounce of gold is a mass that's the same anywhere in the entire universe. Okay. Now let's look at that. So what does change? The price changes. What does that mean? It means that the debasement of the currency continues on and on and on. And if you believe Voltaire that all paper money reaches its intrinsic value of zero, then if you divide anything by zero, this is basic math, you go to infinity. So the paper price of a precious metal like gold has a theoretical value of infinity. Now, we all know that's probably not going to happen, but we do know is that we have too much debt, and the only way that the governments around the world are trying to get out of this mess is by creating more debt. That makes about as much sense as drowning and adding more water to somebody to try to save them.
Well, and let's use the Federal Reserve recently as an example. And a lot of our listeners really do understand this, but we have new listeners coming in all the time. Let's talk a little bit about what the remarkable intervention by the Fed. Now, $85 billion. That money is purely printed out of thin air. There's nothing behind that money. $85 billion every month, and that's just what we know about. All that does is put more paper dollars in the system, chasing the same amount of gold. That's it.
Absolutely. And, of course, it begs the question, well, geez, I believe you guys. It's true. We're seeing this increase of $85 billion. The Fed just announced another $45 billion yesterday, as your listeners are well aware. But I don't see it happening in the gold price. And the reason for that, and I've done a lecture all over the world on this, is that it's the velocity of money. And that cannot be calculated. The money is there. So the gold price isn't a function of how much money's been printed.
That's right.
Because if that were true, we'd already be in the thousands of dollars per ounce. It's a function of the turnover rate of that money. Because you could create a great deal of money, but if it's just sitting on the moon and not being used, it really doesn't apply, if you capture what I'm saying, because it's there but not turning over into the marketplace. So basically what the Fed has done is re-liquefied the banks. These banks were totally, absolutely broke. And so the Fed came in and made the bank solvent, meaning it gave them free cash,
right,
and said, okay, now you can continue business as usual. But most of that money is sitting in the bank's balance sheets. It has not been moved into the economy. Doesn't have to. Basically, there's enough money sloshing around that the corporate structure in the United States and other places has enough cash that they don't know what to do with, they're sitting on, that spark could be taken off at any time, and once the velocity starts to pick up, it's something that even Bernanke can't turn off.
Yeah, but the fallacy of those dollars sitting in reserves on the bank's balance sheet is that when the Federal Reserve tells Americans that they can reverse this anytime they want, that all they have to do is to essentially sell the banks back the bad paper that they bought. Well, excuse me, you had, as you just said very, very correctly, all the banks were illiquid, but more importantly, they were insolvent.
Right.
Now, all of a sudden, you're going to be forcing insolvency back onto the bank's balance sheets, which it doesn't matter whether the Fed holds it or the banks hold it, it's still insolvency. So there is no cure. You're not going to reverse this. You're not going to push more crappy loans back out to the banks. It's just not going to happen.
That's right. No, it's a mess. It's more than a mess. It's really disheartening, to put it politely.
Don't you get upset with an education system where they didn't teach people the simple facts about currency and economics, where everybody said it's too complicated for me, I can't understand it? That's so not true. It's so simple. It's our folks in Washington, folks in Wall Street that convince the average American that they're too stupid to understand this, and they're not.
Absolutely. I agree 100%. My mission statement is to teach and empower people to understand the benefits of an honest monetary system. Gold and silver aren't even in my mission statement, although they're imperative in today's world. But you're right, it's nothing complex whatsoever. And if people, I think it's Henry Ford, I don't have the quote exact, you may, Dan, but it's basically if people understood how the banking system worked, there'd be a revolution tomorrow.
Absolutely. Hey, I want to get a couple more questions in before we run out of time. Higher taxes. We know taxes are going to go up on January 1. We know they're going to go up on virtually everybody. People may not know it, but they're going up on everybody. What effect is this going to have on precious metals?
I think it could have a negative effect temporarily, but the absolute truth is the currency continues to be debased. And whatever the velocity of the money is, more and more people are going to be moving into something that sounds secure and lasted as money for 5,000 years. So you're going to see more and more pressure to the upside. On a temporary basis, sure. There's a lot of people right now probably selling right this minute to start a new cost basis on their precious metals. So if you sell in now, before these new laws go into effect, and you start your cost basis at, let's pick a number, $35 silver instead of, let's say, $7 silver, where you might have held it for several years, right, or gold. Let's take the gold example. You bought $500 gold. You're sitting around $1,700 now or $1,690, and you sell out and you start your cost basis at $1,750 in January. You got a lot different tax consequence going forward. I think a lot of the funds are doing this. I think a lot of the managed money, I think intelligent people who understand what's going on are doing this. So it's putting downward pressure on the metals right now. I think it's going to bounce back probably in the first quarter of the new year, and I'm looking for 2013 to be the watershed year, meaning we're going to take out the nominal highs, gold above 1,900 and silver above 50, and then it's up and away. Not in 2013. I think we're going to get a very strong year in 2013, but as far as the blow-off manic panic high that we saw in 1980, which I think 1980's high is going to be a warm-up compared to what's going to happen this time around, that's probably going to be around 2014 to 2016.
We have varying opinions on the show, as you would imagine, but we have lots of folks that believe silver is even better than gold. Where are you on that?
Well, I'm known to be one of the world's leading experts on the silver market. The fact is, this is not opinion, this is fact, that silver has outperformed gold already. The bull market started with a ratio of 80 to 1. It's now about 53 to 1. So clearly the evidence and the fact is that silver's outperformed gold. I believe we've got about a 3 to 1 ratio, meaning that as high as gold goes, silver's going to be 3 times better. So if gold doubles from here, silver will have a sixfold. Now, whether or not I'm right remains to be seen. The trend is very clear, though. The trend favors silver. But I always state that people should own both. Silver is very volatile. Gold has had 12 years in a row of up moves. Silver has not. Silver's had some down years in this bull market. And so I think depending on your age and your risk tolerance level, the older you are, the less risk tolerance you have, you should be more favorable to gold. And if you're young and aggressive and you can handle the swings, then you could probably favor silver.
So just using a round number, let's say I'm allocating 10% of my assets to precious metals, gold and silver. As far as dollar value goes, how would you allocate that between gold and silver?
Like we were taught, and I'm schooled on an Austrian school basis, but I graduated from a Keynesian economics course, if I'm making sense to your listeners. It's like the bond thing. If you're 70 years old, it should be 70-30. So you're 70% gold, 30% silver. If you're 90 years old, you'd have 90% gold, 10% silver. That's the general idea. I go on a case-by-case individual basis. I have a friend that's 80 years old. He's like 80% silver, but he knows what he's doing, and he got in very early. So, when you're in at 5 or 6 and you go from 48 down to 35, it might hurt, but you got in at $6, so you can handle that. Anyway, I do think that that's the general idea.
All right, I've got about a minute and a half to 2 minutes left, and this is a tough question, but I think you can do it. Tell me about investing in gold. There's so many ways: physical gold, gold trusts, ETFs, mining stocks. Right now, which looks like it has the most potential, let's say, over the next 6 months to a year?
I'll do it as best I can. I've always been consistent that you should buy the real metal first, and I won't back off of that. However, for right now, the mining shares are at a 30-year low relative to the bullion. There's no doubt in my mind that the mining equities represent the best value, especially if you know how to pick them. We're very good at it. I'll plug my work a little bit. It's not just me. It's a staff of analysts, myself, and a lot of experience, and really we dig deep. But I would not tell anyone to buy the mining equities unless they have a physical position to start with. I'm really, really adamant about that. I can't make people do that, but that's what I've pounded the table on from the beginning. It's a different asset class. Gold and silver coins are outside the matrix, outside the financial system. They do not have counterparty risk. Once you've established that core position, then you can move into something more risky, and the mining equities are.
Sure. Oh, and I appreciate that, because my advice, I don't give financial advice, especially on the air. But if you're going to own precious metals, if you don't, like a good friend of ours, Kyle Bass here in town says, if you don't hold it, you don't own it. And I'm a firm believer. At the end of the day, paper is still paper, and bullion is an entity all unto itself.
Absolutely, I couldn't concur more, and that's what I've taught and what I continue to teach. And of course, people say, "Well, geez, I really don't feel like buying it at this price." It's like, well, tough. What else are you going to buy? And that's the other thing. So, well, it's too high. My whole lecture in the next gold show I'm going to in Vancouver, British Columbia in January talks about it's not too late in this bull market and what happened in the last bull market. Most people don't know this. I'm a silver advocate, as you know, but silver started in 1979 at $6 and ended in 1980 at $50.
Oh, yeah, absolutely.
We had an 800% increase, actually more than 800% in that last year.
You bet.
So if 90% of the move comes in the last 10% of the time, and that's basically what happened last time, it doesn't guarantee it'll happen this time. But if it's similar, and I think it will be, then it's really not too late to get in these metals, because, again, it's an ounce of silver doesn't change, an ounce of gold doesn't change. What's changing is how much money's been thrown out by Helicopter Ben.
Oh, yeah.
Believe me, it's so much you can't count it all.
All right. David, do you want me to use silver-investor.com as the website? Or do
that will be the best, yes. Thank you.
So silver-investor, or dash, whichever word you want to use, .com. David Morgan, The Morgan Report. David, we appreciate it very much. Merry Christmas and Happy Holidays to you and your family, my friend.
Well, my shame to you and all your listeners. Thank you.
All right, God bless. We're going to be right back. Richard's going to be with us. Becca's going to be with us. We're going to end the week on a light note. No more good news, just Richard. We'll be right back.